Good morning, everyone. Welcome to the Naples Money Managers News You Can Use. I've already got stumbling around here this morning. It is August 2nd. John's back there giving me the old 2 back there, just so I can keep track of what day it is. I mean, August 2nd, I can't believe summer's halfway over.
I know, where did it go?
It went, I don't know, the stock market's going with it up, I hope. We're going to talk a little bit about that today and some of the concerns that people have, and as usual I try to bring a couple other interesting things, I hope, to the show in the morning.
News you can use.
News you can use. Well, remember last week I talked a little bit about my classmate who had the tremors, and I couldn't remember what it was in his fillings, and everybody probably already knows, but it was the mercury in his fillings that was supposedly a cause of this. I'm going to find out more information because I don't know if it actually is caused him to get Parkinson's, or it's a symptom like Parkinson's, or if it will stop once all those fillings come out. I know one of our clients who's a dentist told us that once they take them out, there's like a little explosion of this mercury.
Mm-hmm.
Well, kind of scary to me,
Yeah,
but you know.
to me too.
Anyway, anybody who has any problem with anything of any kind, if you've got old fillings, make sure somebody checks them. I know that's bizarre. Also, we had a client ask us a question, and I don't have the answer for you yet, so I'll let you know the question right now is, if you own a home, your residence, and you each have a trust, and you own it in one person's trust, and the other person dies, does it get a step up of half its value? It's a really good question. So I will find out the answer to that. So a classic example would be maybe the wife had it in her trust and she put in 60% of the value, and the husband will put in 40% of the value. So upon her death, 40% would go to his trust or his heirs. But what happens if one of them dies first? Does it step up in value?
That's the question.
Right, and with real estate values now, that's a pretty big deal. So I will find out, and I'll let Dennis know, or I won't be here next week, so you can let everyone know. Might want to take it out of the trust and put it into joint names at that time, or 60-40 or whatever, and save yourself some tax money, because we know eventually we all are checking out of this world. Couple of things that once we start talking about the markets, I wanted to talk about the swings. I have some statistics on the swings of the market. Also, that anybody thinking about converting their IRAs to Roths really should have their CPAs run the numbers. The younger you are, the better it works. But I think it's a given we will have a higher tax rate. Don't believe that's going to be retroactive according to the current bill. However, capital gains, according to the current bill, will be retroactive to April 2021. So trying to scurry around and get anything done before the end of the year now is too late.
For capital gains, it sure is.
Too late, capital gains. So Dennis, in 2020, the stocks went down 20%, but finished the year up 16%. You talk about a swing, right? So that's sort of a historic reversal that we're talking about. But in 2019, stocks declined 7% at one point, finished the year up 29%. 2016 down 11 to close up 10. 2014 down 7 to close up 11. And I bring these points up because we're probably going to see something like that at some point.
Oh, there's no doubt. The market does have its ups and downs, and in a typical year you see maybe 10% corrections.
Wow.
To the market. Some of them maybe more than that. So what's been really surprising over the last couple of years, aside from the COVID breakdown in March, is that there really hasn't been any kind of a significant correction.
Below 10%.
Yeah. Right.
Well, we got below at least once, but I could be wrong. So I guess when people start to see that, the only reason we're talking about it is this is normal.
Part
this
of the
is
market.
Part of the process.
Yep.
And in fact, I always look for it to drop a little bit, let a little air out of that balloon, so we don't get that constant and then have it pop.
A big pop.
Yeah, a big pop. We want to let a little air out, and it's called building a base. And you notice we built a base for the longest time around 25,000. Now the base seems to be closer to 34,000,
I would say
which
that's
is,
right.
I can't even believe those numbers are coming out of my mouth.
No, it's unbelievable,
I
isn't
know.
it?
But so what do you think? What are you hearing from clients, and how are you answering this question?
It seems like the attitude right now is to conservation of capital seems to be the word that sums up people's thinking right now, and maybe that is just because of the psychology of the moment, and we're only setting the base for going higher. But right now, investors seem to be cautious.
So we're talking about retirees and pre-retirees, but is that the case with the younger people?
No.
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 They're looking for
That's
GameStop and AMD.
The Reddit crowd are just having a lot of fun with their putting their funds together informally and making stocks maneuver all over the place. But that's got to be the below 30 crowd.
Well, I talked to a young man yesterday, and he's probably in his mid-30s, and he was talking about how much money he made and then unmade. Not necessarily in stocks, but it was another investment that he poured everything into because he was making so much money, and then the market fell out, and had to started up all over again. But of course, at 30, 35, you can actually afford to do that.
Well, that's if you're going to take your risks. Wisdom has it, take it when you're young. The problem is when you're young, you probably don't have enough money to really hurt yourself permanently.
But you don't need much.
You don't need much, and again, the talk is that this Reddit crowd, the youngsters that are playing in the option market, really are taking their checks that they get from the government, $1,400 or so, and putting it into the stock market or the option market. Well, you get 100,000 of them doing that, and before you know it, you're talking a lot of money.
Yes, good point. But a lousy $200 a month is a huge investment going forward. And today, $200 a month is what? Dinner for four? Would I say in Naples anyway, right? That's probably too cheap.
Yeah,
Probably more like 300. But so starting young still for all of your grandchildren, your children is so important. They don't need a lot of money. So they can pick up the phone and call us, and we can help guide them through that. Plus our double income strategy, what a great way to preserve principal.
It is. It not only provides a natural hedge to the market, but also provides cash flow and gives you an option of, no pun intended, to do things other than just buy or sell.
Right, and if you have apartment buildings and you're collecting rent, as long as the rent is coming in, no matter what happens to the value of the building, you're okay. And we have been through how many huge drops with this strategy? We've been through at least 3 or 4 40% drops, and our clients will verify that they still have their principal and they've lived a good life.
Absolutely, that's been that's the lesson right there.
That's right.
Don't get out of the market.
So with that, we're going to say good afternoon to you now, and this is Money Matters. Most of all, and most importantly, you matter.